I think there's three terms that people tend to conflate: commodity, currency, and token. And they're all related, but they're all different.
One of the ways I really try to boil it down is think about scarcity and what does it mean to have true digital scarcity. But if you just pretend that you take a picture of a dollar bill and I send that picture to you, that's not going to have any value because I still have it and now you have a copy, whereas now you can enable true digital scarcity, and I think that is the fundamental impact of the blockchain.
So just like before, where we took photos and videos and music and movies and all remix them into packets, now we're going to take cash, currency, stocks, bonds, real estate, all these things, and put them into blockchains where just a ledger entry, a plus and a minus, reflects that scarcity and allows us to do programmable scarcity.
There's only a couple fundamental use cases today that really exist and are providing real value. One of those that I and everyone should be excited about is an unseizable store of value, the first asset in human history that can't be seized or taken from you, and you see that with Bitcoin.
So having a decentralized form of money that's not created or controlled by government or a company is a very, very powerful concept.
Bitcoin itself is becoming more of a commodity. It acts like gold. It's a store of value. It's a place that you can push fiat currency and money into and then hope it appreciates over time. But people aren't really exchanging or trading it very much. So I think that'll end up being a commodity, even though we call it coin or think of it like currency.
A number of institutional investors don't yet appreciate that the younger generation of investors are not looking at gold the same way that the older generation is. And I think that as millennials and Gen Xers and Gen Yers start to shift more of their money into digital currency, I think we're going to see a pretty massive flow of gold investment money moving into digital currency.
When we look at store value today in the current generation of wealthy individuals, that includes gold, but it also includes art, which is close to a $17 trillion market, $280 trillion of real estate, and close to $20 trillion of negative interest rate bonds. So I think if Bitcoin is a store of value, it's addressing close to a $280 trillion market.
To have currency, you need stability. You need to be able to trade it every day and know that you're buying products and services and they're worth roughly the same amount over time. And that hasn't really emerged yet in the crypto area, even though we say cryptocurrency.
There are roughly 83 currencies in the world, and frankly, the bottom half of them suck. I mean, they're mostly despotic countries. They're rigged systems. They very much favor the elite over the rest of the classes in those countries, and should go away.
It is impossible for Bitcoin to achieve a currency status without first achieving the store of value status. That's because for Bitcoin to be used by people as a currency, everybody needs to hold it. You have to presuppose that people have it. And to get to a state where people have it, they need to have heard of it, and they probably need to have bought it or be given some.
With any financial market, once crypto is in the crypto ecosystem, it's hard to seize it. To get money in and out is using the existing global capital markets, and those are all controlled by global governments.
Right now, there's only three things that exist that are deriving real fundamental value. You have digital store value, which we talked about. You have privacy and anonymity, where there's a few coins optimized for that. A lot of people think Bitcoin is, but it's not, but some are. And then you have basically this new model for crowdfunding and ICOs, but that's it.
But if you're in a second or third world environment, this can allow you access in a way that you simply could not have to any financial on-ramps.
I'm originally from Venezuela and have seen how really Bitcoin can have a source of value for countries and people who are really suffering in dictatorships and censorship governments. Removing the ability to have inflation that's 800 or 1,000% month over month, and these individuals buying Bitcoin as a store of value, an ability for them to skirt currency controls is extremely important in this day and age, for them to really have a safeguarded way of keeping their assets.
Digital currency is an asset class, so digital gold is here to stay. Whether Bitcoin's a winner or not remains to be seen. Today I think it's the winner, but it might not be.
If Bitcoin's use case is store of value that nobody can mess with, no government, no third party can mess with your value because you control it, that's a pretty powerful use case. I don't think you need a lot of developer adoption on top of that for it to be long-term successful.
Bitcoin today has been used or correlated to gold in that it's a store of value. That's because transactions transactions are slow and transaction fees are high. I think the future will look like many, many different kinds of coins and many different platforms that all have unique and special use cases.
This generation isn't interested in gold. They're not interested in buying property in part because probably the prices have appreciated so much it's inaccessible, and there seems to be a lot less trust in government. So the younger generation have more trust in these architectures of the internet that they've grown up with as a way to store their permanent value. I don't think we really know if it's going to be a good long-term store of value or not, but at least we have 9 years of proof that it hasn't yet all collapsed.